All right. I think let's get started because we have a lot to cover. But yeah, welcome everyone. I'm Francie. I lead product here at DrivePoint. We are a financial planning and analysis platform specifically dedicated for CPG brands. And today we're tackling one of the hardest problems in CPG finance, which is how do you forecast a channel where a single viral video can 10x your demand overnight? TikTok Shop did over $15 billion in US GMV last year, growing nearly 70% year over year. Beauty and wellness, which is what our speakers know deeply, is a number one category on the platform. So it's not really a niche experiment anymore. TikTok Shop is a core channel. And today we're here to discuss forecasting TikTok Shop from viral growth to profitable planning. Now, let me introduce you to the most important people on this call, Meredith and Grace. Meredith is a senior financial analyst. You're living this every day at Love Wellness. Give us a 60-second version of who Love Wellness is and what you do there.
Hi, Francie. Thank you. So I, like she mentioned, am a senior financial analyst at Love Wellness. We were founded in 2016, so this is our 10-year anniversary, and we're a clinically studied women's wellness brand. So our main focus are products to help women with their vaginal, gut, and hormonal health. And we really try and emphasize the importance of clean ingredients and clinical studies. So most of our products kind of fall into that scope, and we're constantly innovating. So we recently had a launch for our new quick melt strips last week, but we've had a few other launches in about the past year or so. Previous to this, I worked at a company called Knix, which was also a CPG brand. It's known primarily for its period underwear, but it's a women's intimates company. And prior to that, I worked in the audit area at EY. So I've moved more into the forecasting world now and really love it. Love Wellness is definitely in its growth stage, and we have a lot of exciting things coming. So I'm excited to be a part of it and to kind of wear a lot of hats at the company and touch everything that's going on as we kind of reach our full potential.
I love it. I'm a big fan. Thank you. Grace, you're the founder of Touch Capital. You're looking at this from the investor side. Tell us about Touch Capital and what brought you to this topic.
I will. But firstly, Meredith, I love Knix as well. I didn't realize you were there before. That's one of my favorite brands. So I co-founded Touch Capital in 2022. We're a venture fund investing in consumer brands across food, beverage, pet care, beauty, and personal care. I would say what's interesting, and we'll talk about this in more detail, but in general, we tend to see that trends start in beauty, then they go to food and beverage, and then they sort of end in pet. And I think that what we're seeing right now with all of the momentum of beauty on TikTok is now really spilling over to food and beverage, which is very exciting. And then we will at some point see it spill over to pet on that journey. And I'm based in New York.
Awesome. Love it. Thank you for the intro. All right. Now, Meredith, take us back to the beginning when Love Wellness was considering TikTok Shop. What was the conversation internally? What were sort of like the biggest questions that your team tried to answer?
Yeah, definitely. So we launched on TikTok Shop in May of last year. I think everyone knows that TikTok has become really huge as a social platform. People really rely on it for their like reviews and things that they're choosing to spend their money on. It really has it receives a lot of trust from the people that it's working with, like the influencers and content creators that are on there. And I think we knew as a brand that it was something we wanted to participate in, but it's kind of like a how. So we picked a
Right.
start date. It kind of aligned with a few product launches that we'd done earlier in the year, but initially it really was just kind of an impressions engine, kind of a content creation engine. So we had a few content creators. We like were set up on the platform, but it wasn't really a sales channel in the beginning. And I can say from my previous life too, like this was the same sort of thing of how do you kind of approach the beast, or do you just start? So we worked throughout the summer to create more content and kind of make connections, kind of figure out the platform and see what worked for us. But we didn't really see much traction in terms of sales and like sales actually happening there, not just TikTok content being
Mm-hmm.
reshared until the fall. And that interestingly was like supported by the work we were doing in the summer because we had one product that went viral kind of starting in October. To give you a sense of like what that growth was, we did about 300% growth in order volume from like June to August. But
Yeah.
by the time we got to October, that was an 800% growth compared to like in month over month sales, like order volume, and then 600% the month after that. So we really saw a boost in the volume and like the customers that we were
Yeah.
seeing actually making purchases there instead of one of our other sales channels. So that was kind of the early days and what we decided.
I love it. Were there moments that caught you sort of completely off guard in that growth curve?
Definitely. I would say that one thing that was really exciting for us is, like I said, we were like investing resources into the channel in the summer, but we weren't really seeing much return
Yeah.
on them. And then some of the content that we were posting in August became viral. I don't want to say overnight, but very, very
Mm,
quickly. And then October is sort of when we saw the other side of that. So
right.
our product, Intimate Skin Support, which we actually launched in February of last year, and we saw a big jump. People really like the product. It's something that's new. It's like an antimicrobial spray, but for your intimate areas. So it hadn't really been done before, but we thought
Mm,
we kind of met our baseline sales. Like we have our subscribers, we've had like our big brand moment. And then that really came back in October because, like Grace was saying, like wellness is doing really well on
yep.
TikTok. But we didn't really have a differentiator that yet. And so that, because it was something that was net new to the market in a lot of ways, really made us stand out, I think.
That's awesome. I guess from a finance perspective, like what was the cash flow impact when the demand spiked? Like, did you have the inventory or how did that happen?
Well, so luckily we did because our
Yeah.
COO was like wanted to be conservative at the beginning of the launch. So what in like the first month that we saw, okay, sales are spiking, we really, because we had longer lead times for this product since it was net new, we really like built up our supply. And if, funnily enough, like a couple months prior to that, we were worried, okay, we need to move
Yeah.
this. Like that
Yeah.
demand,
Yeah.
we know what our demand is, we have sales, but we're not going to see that chart continue going up and to the right. And then luckily for
Yeah.
us, there's a bit of a change with TikTok.
That's awesome. Very cool. Grace, I know you see this pattern across your portfolio from your vantage point as an investor. What signals tell you a brand should really lean into TikTok Shop versus sort of treat it experimental?
Good question. I would say that where we are today, TikTok is now table stakes. When you look at the
Yeah.
US market, I think it's sort of 48% more time spent on TikTok than on Instagram at the moment, which is pretty phenomenal if you think about how new the platform is. I think the question on TikTok is whether it makes sense to use this purely as a marketing brand building channel or whether you're really focusing on also TikTok Shop and how you drive sales through that. And I would say the matrix with which we would look at that and the matrix we see brands looking at that really comes down to their category and gross margin. So broadly, if it's take beverage as an example, beverages in general, lower gross margin, more expensive
Mhm.
to ship, probably not best suited for TikTok Shop, though I have actually seen some brands who've done a fantastic job to counter that by shipping in these kind of bigger packs and a bigger AOV. Where you compare that to companies, supplements, beauty, or actually in salty snacks, where you can have companies where you have a sort of 60, 70, 80% gross margin. And there you really have enough sort of gross margin to play with in order to then do the various commissions, which I know, Franzi, you're going to take everyone through in a bit. And that can then be a really interesting channel.
Very cool. How do you sort of like, or what questions, I guess, do you see brands struggling most to answer when it comes around TikTok driven growth?
So what we see is really this question around attribution. So I would
Mm,
say, yes, you have the investment you spend on TikTok and then the revenue which comes through TikTok Shop. But then there's also this additional halo on Amazon. There's the additional halo
right.
on D2C. And with several of our brands, it's also the additional halo when they go into retail, and they can drive real incrementality to that
Right.
category because their customers know the brand already through TikTok. And I think that there's not a perfect science, and I'm sure we'll get in the comments some service providers who can do this and can measure the halo, but it's
Right.
a complicated thing to measure. I know we have one portfolio company, and they suddenly saw their Meta CAC going up significantly, and then they were looking and they realized it was actually because they were reducing certain spend on TikTok, and that
Right.
was having such an impact, which you wouldn't necessarily immediately think was the reason. So I think the attribution thing is important, particularly with Amazon. And I don't know, Meredith, if you see this with your brand, but sort of it feels that TikTok is also a real driver to Amazon as well.
No, definitely. One thing that we've kind of been looking at recently is, like you said, like the influence of TikTok impressions and how that can flow into Amazon as well as wholesale. So one analysis we just did is we launched this product, Intimate Skin Supporter, really started pushing it on the channel, as well as our pH balancing cleanser was another one that was complimentary and kind of a quick results type product that we thought was suited to the channel. And we kind of did a post-mortem recently and saw that our sales in our wholesalers were really improving for those products. And then when we kind of decided, okay, we're going to pull back spend a little bit right now on TikTok in preparation for a product launch we had coming up, then we saw that as those TikTok impressions came down, we also saw sell-through volume come down in our retail sales. And we didn't realize quite how correlated those two things were. And Amazon definitely the same thing, especially with like competition online in terms of if Alt is having a sale, Amazon has to match those prices. So if we can really push things on TikTok, that's a very important lever that we need. And I also like kind of to your point about the halo effect and how do you measure that, especially like we all have attribution models, but it's difficult to know like what really converted a customer. And so something we've been looking at trying to do recently is a product specific CAC. So total brand spend for a particular product. So we're launching our strips right now, which are like a quick melting strip kind of in place of a supplement. And the idea with that is, okay, all money or all campaign dollars we're putting towards strips, whether it be retail media or Amazon or Meta, TikTok, what have you, how much, like, what are our sales for those products, like omni-channel. So we're looking at sell-through dollars and comparing those, which again, it's not perfect, but it'll give us a slightly better sense of, okay, maybe our ROAS doesn't look exactly how we want it on TikTok, or our D2C CAC isn't what we expected, but we're doing really well in Ulta, that kind of thing.
That's
I
awesome.
think from our perspective also, I think there's as investors, there's a really interesting crop of businesses who are coming up and are getting real scale through TikTok and TikTok Shop, and just entrepreneurs who truly understand, live and breathe the speed of which you need to create content, the sort of bell curve at which the content will stay relevant and quickly iterating. And I think that's incredible. And then I think the sort of key, left hook, right hook, the next stage of that, which is very interesting, is then how effectively can they use all of that momentum to then get an additional retail account, which is going to be much less sort of fitful, for want of a better word, because the sales, I mean, potentially it's a seasonal product and then you have a different issue. But if it's a everyday item, then you have this much more stable velocity, stable forecasting through the retailer, and that can kind of make up for the sort of bell curve of TikTok performance.
Yeah, like you could handle the volatility on one channel because your other channels are so stable.
Exactly.
Yeah.
That's awesome. Cool. So obviously the growth story is compelling, right? But I want to get a little bit more into the unit economics and the finance side of things. What does a TikTok Shop sale actually net, right? And so for you, Meredith, walk us through your sort of aha moment when you really understood what true TikTok Shop profitability looks like, and what surprised you most about the fee structure.
Yeah, I would say a few things that, and I know you're also going to break it down pretty granularly for us.
Do you want the slide now? Do you want it, or stay high level first?
I can stay high level and then I'll break it down.
Perfect.
But I think we didn't realize quite how much what kind of a pay to play it is in the beginning. So for things like a campaign fee. So right now there's a new arrivals campaign running on TikTok, which is a great campaign, but within those you have to pay a certain percentage of all of your sales. So that was something that great, you really get great exposure and TikTok really does like boost your content. But in exchange for that, you better hope that you're meeting the GMV that you were kind of promised or that you had hoped for, because otherwise like a big chunk of that is going away. And also I think another surprising thing for us was the affiliate commission. I think it's a minimum of 15%, but in order to really reach an audience and to like something I think we also kind of learned early days in the summer was it's quality over quantity with the content. You do need to be churning a lot of content, but at the same time, you don't want to just be handing out commissions because people see that they're offered. So a slightly higher commission percentage, which again, these companies like this kind of realm is a higher margin industry, but at the same time, it really does start to add up.
Makes sense. Let's look at it. At least slightly, right? So I would assume this is a $25 sale. There's a referral fee that you just talked about. There's some like processing fee. Talk to me a little bit about the affiliate fee. So you see it sort of like at a minimum of 15%. Can you share like roughly the numbers of what you sort of like actually see on average for Lev Wellness?
Yeah, so with affiliates, we're seeing about 25%. And then fulfillment by TikTok hasn't launched yet, but that'll launch like later this month. But
I was
that's
gonna ask about that.
Yeah, that's about the realm that we've estimated, like that $4 to, I think it's like it'll probably be more closer to $3 or $2.50 to $3. So 10%. But yeah, so that's definitely going to be another layer, especially from a demand planning phase too, because yes, our shipping costs will be lower, but at the same time, because it's so volatile, like Grace was saying, we really need to make sure that our inventory levels are strong at the fulfillment center for TikTok in case something goes viral overnight. So I'm quite interested to see how they handle that. And then our COGS are slightly stronger than that. So that's a bit healthier on our end, but they're definitely, and then at this period, because we just did this product launch, it's about another, I think 10 to 15% for the campaign fee. So
that makes sense.
Yeah.
Very cool.
I also, one call out is our AOV on TikTok is, we have AOV targets and it's something we're working towards, but it's definitely about $10 lower or something than like our D2C channel. That's also by nature of like TikTok's shipping requirements. So like what you need to get free shipping as well. We have a lot more subscribers, like in terms of cohorts on our D2C channel. And so that encourages higher orders.
That makes sense. Is there anything else that like in this, because it looks like so attractive, right, compared to Amazon initially, and then you sort of get into the weeds and you get to contribution margin, you're like, I guess how do you think about comparing different channels and like the unit economics like across your channels and like how it's sort of still attractive to you, or like, and we'll get into that a little bit more, but for me, seeing like the fee breakdown, like there is a lot going on here. So I'm just curious sort of like how you think about it internally and like calculating growth.
Yeah. I think in terms of like justifying the fee economics or comparing to Amazon right now, our main driver or like the thing that we're watching most closely would definitely be impressions. So we care about the sales number, obviously, and we're looking at our margin, but because this isn't 50% of our business, it's more like 30% of what our D2C business is, like that kind of, so it's definitely an incremental channel, but it's not changing our whole P&L. It's just kind of a boost on top of it. And so even with like a slightly lower margin than what we would see on D2C, because that's boosting our other channels, and we've kind of seen evidence of that. That's sort of how we're able to justify the unit economics on this particular channel.
That makes sense. Grace, how do you think about that from an investor perspective? Because I would imagine you're probably interested in the contribution margin, right? But to what extent do you also sort of take into account impressions and sort of how Meredith and her team make decisions in terms of investing in the channel.
I think that's really important. And I think it depends a little bit on the life stage of the company, because I think that if you have a company where fundamentally in consumer kind of cash is king and your cash conversion cycle is the most important thing, because you buy products and you spend your cash on it, then you hold it, then you sell it, and then you get paid back later. So kind of cash flow is so important. So if you have the buffer to be able to invest in this channel, because remembering this is obviously the shop unit economics, but then you also have your creative. Is there a creative agency you're working with? And those agency fees on top of that, kind of how are you creating the content to get the impressions, and how are you supporting those? And I think that if you sort of need to, the way I view it a little bit is some of those costs is kind of the equivalent of what your slotting fees are in retail, because retail marketing but it just sits on a different place in the P&L. But retail marketing is a very expensive part for a CPG brand to go into retail. You're spending, if you go into a Whole Foods, you're spending, call it 10 to 25% of your business in marketing, of kind of getting off-shelf placement and all of those things. So they're expensive channels. And I think that if you just look at this as a standalone, you might think it's kind of more attractive, but actually then you get these additional, as Meredith's saying, kind of add-on, bolt-on costs, and then it kind of becomes more like for like as a retail channel. And then I think just viewing these retail channels versus TikTok as sort of, they can be billboards in themselves, but the reach and breadth of TikTok right now, I think, is just so unique and unparalleled. It is just this kind of base level marketing brand building that's so important. So yes, impressions are good, even if they don't convert.
Yeah, no, that makes sense. It's an interesting time. I guess, Meredith, the last question before we jump into some forecasting conversations. Is there anything that you think I'm missing on this slide? Are there any hidden fees or hidden costs that you sort of learned about while already being in TikTok Shop, or like anything you would call out when it comes to unit economics?
I would say the main thing would be the campaign fees, and that also like a big chunk of TikTok revenue comes from like those live feeds. So if you want someone who, like, TikTok will make recommendations to you too, which is great. And they'll say like, this person is known in the wellness space and they're a great seller, and like they have a really loyal customer base or follower base. Yeah. Which, so they do kind of like help you out in that sense. But at the same time, like they're, again, like we said, you maybe could pay a 15% affiliate commission, but that might turn more into 25%, or one of the sellers that TikTok is recommending who like has the stats, can sell well, but you're going to pay more for that. So it's definitely competitive too, where they know that it's the trending channel right now. There's a lot of brands that it wouldn't be difficult at all for them to pay for that. Whereas for a smaller company, it's more difficult to justify, but it really is important, and you can reach a much wider audience and make the conversion happen, kind of to Grace's point, if you invest there, because there's so much content moving around. I think it's just more like what percentage you're playing with. But I wouldn't say I would add anything to this list. It's more just the value of those things.
That makes sense. Quality over quantity. That's a good takeaway. Great. All right, I want to move to ideally forecasting. So I'll just get the stock image up again. Meredith, when you first sat down to build a forecast for TikTok Shop, what data points actually mattered? And to me, more importantly, how do you approach forecasting a channel when you basically have zero historical data? You talked a little bit about the sort of like beginning of the year versus like viral moments in October and different phases sort of the TikTok Shop journey. Maybe how do you approach it from a forecasting perspective?
Yeah. So to begin with, the first part of your question was on
what data points actually matter.
So when we're building our forecast, like for the year, the things we're looking at is content generation. So how many pieces of content are we aiming to put out within a month or within a quarter? And then also with a ROAS target. So we're kind of basing that on if this is a ROAS that we think is achievable, this is how much content is being produced, then what would we have to spend in order to achieve that? We kind of have a sense of our average order value at this point, so we know how we can build up to that. But the guardrails that kind of go into that too is like, okay, what's the target AOV?
Right.
What is our threshold for spend? And then what's our target ROAS? And we also have, we're still really trying to maintain, I saw a question in the comments, our like highest discount that's available is for subscribers. So most subscriptions, if not all, are going through D2C right now, some on Amazon, hopefully some on TikTok soon. But we're really working to maintain that so that people think, okay, the best way to get a deal on these products is through a subscription, like being a loyal customer who's like returning each month. So we have offers on TikTok and we know that that makes us competitive, but we've been pretty kind of guarded in making sure like this is our threshold. We don't go beyond that because otherwise that kind of becomes standard or what people come to expect. In terms of forecasting, it's been pretty interesting right now, especially because we have a product launch that's going on right now. And it's one new format, but it's 6 different variants of that format because they kind of match different supplements that we already have on sale. So there were 2 big factors. One, which variant do we think is really going to fly? Because not like it would be great if people loved everything equally, but that's really never how it plays out. So there was some sort of like work with the marketing team to see what we wanted to push, but also kind of basing that on which hero products are really performing right now. The next part of that is we've never done a true launch on TikTok Shop. So when we came forward with Intimate Skin Support and our cleanser, we know that those are hero products. We know that customers really like them. We know what kind of content and messaging really resonated with people. Whereas with this, it's kind of the same approach across the market. So what we're posting on Meta is pretty similar to TikTok right now, but we don't really know how those are going to land with the different audiences and if we should differentiate that or kind of maintain our approach with that whole thing. So we're comparing our sales levels on like earlier last year when we did a launch at the same time across e-com specifically, so D2C and Amazon. And our hope is now that like TikTok will definitely be incremental to that. So like D2C and Amazon will do similar levels, and TikTok, it's about matching our non-recurring revenue stream at this point, and we'd like it to kind of match that for this launch specifically too.
That makes sense. Are there any leading indicators for specifically the strips launch in terms of like, can you predict a viral growth, I guess, viral video?
So our main way for doing that early was we did a lot of sampling kind of around the holiday period. And then earlier this year, we had 1 activation, that sort of thing. But we really tried to use that information to see like which products we were getting strong reviews on and kind of the frequency people were using them. So like if it really was something that people are using kind of immediately, like it's fast, so you use it all the time. You have 1 in your bag, 1 in your bedroom, that kind of thing. And we did find that to be pretty helpful. Like the variant that we expected to perform the best definitely has been, and that was mostly informed by the sampling process that we had. So again, we just wanted to kind of get that content generation and like review cycle started as soon as possible.
Yeah, that makes sense. What are if you had to boil it down sort of to 3 metrics that you monitor weekly, which ones would you choose and why?
Yeah. So ROAS is definitely the one that we're looking at most closely. We monitor it almost daily at this point. And we look at our e-com level ROAS as well as like the TikTok specific ROAS. And so like this new product campaign that we're participating in right now, which is like a TikTok level campaign, we committed X amount of money. And so at this point, we just want to make sure our ROAS is positive. Because, which you always do, but you'd be surprised how sometimes that doesn't happen. But it's just informative to be like, okay, we are getting, like our spend is leading to something. So ROAS is obviously the best indicator for like profitability, but also just general growth. The next one I would say is impressions, because again, we know how that has a halo effect for all of our other channels. And then finally, conversion, because
Yeah.
like Grace said, it's great to have impressions, but eventually you need to see those people come back
Right.
and convert. So yeah, those are the main three that we're focusing on.
Awesome. I love it. I see we got some questions in the chat. We'll get to them. We have reserved, I think, at least 10 minutes, if not 15 at the end. But I would love to transition to you, Grace. When brands come to you with explosive TikTok growth, how do you think about whether that growth is sustainable or not?
That's a very good question. I think that in CPG, there's a couple of things. Us as an investor, we invest in brands, and our focus as a fund is we invest in brands. We want to see a strategic exit at some point, and we want to help these brands get a strategic exit. And in order to do that, and there are incredible consumer brands who print cash and never want to sell, and that's amazing, but that's not what we invest in as a fund. We invest to drive liquidity for our shareholders. So from that perspective, we need to look at the brand. And I think from a brand perspective, we need to see that this is a brand which is able to sell because of the brand and emotional reaction people have with that brand, and not just, price arbitrage and that piece of it. Now, that piece of it is fundamental, making sure you're being capital efficient in terms of how you're investing in people discovering your brand and that it's working on the bottom line. But it's also got to be a brand which stands in itself so that additional product expansions can come along the way, which is obviously sort of what the acquirers are looking for. And I think on the second point, which is sort of an illustration of this, is really repeat purchase rate. And I think that that's very important, because you can have fantastic creative, and I get sent this creative and I buy the product, but I don't think I'll ever buy the product again. And it's normally something about, it's like, oh, my gua sha or whatever, my hair's falling out and I need to get this serum, and, I buy it. I am that customer. Would I be able to tell you the name of that company? No, it's just a box of stuff which comes in a brown box, and I kind of just use it, and then sometimes don't even use it and just say, oh, I bought something I shouldn't have bought from the internet again. But that, I think, is really important, because that repeat purchase rate of solving a real customer need is what is going to both obviously create your value as a business long term. So I think those 2 points are important. Then I think the third point is omni-channel distribution, because I think we've seen, if you look back over the last sort of 6 years or so in consumer, you had the iOS update, which significantly increased, obviously, customer acquisition costs for D2C brands with Meta. And then you had COVID, which made it very difficult for brands to sell in retail. And I think sort of what we want to see is multiple channels of distribution, be that TikTok, of course, is a key one, D2C, Amazon, whatever. We're not specific on what it is, then retail. And then when you look inside retail, really thinking kind of across retail channels as well. I mean, is it specialty for a beauty perspective? Is it mass? Is it the natural channel? Is it B2B channels? And making sure that you have these robust channels, so that if anything goes wrong on each channel, that you're sort of protected and hedged across the board.
That makes sense. That's awesome. Repeat purchase rate, the name of the game, any channel, pretty much. Yeah, I remember when we started I think it might have been Love Wellness. Some of our customers came to us and they were like, oh, we just started selling on TikTok Shop. And so DrivePoint we have a native TikTok Shop integration. Shout out, I think, to some of our team that's on this call as well for building it. But one of the things that we looked at early on was sort of being able to use the sales data that we get from TikTok Shop to create repeat cohort like repurchase rates that customers can pull straight into their forecasts. So we're trying to basically equip all of our customers with a click of a button to get sort of their updated repeat purchase rates essentially right into the financial forecast. So that's how we're thinking about it from a product perspective as well. Cool. So now we have a forecast, right? How do we make sure that the growth stays profitable? We'll get to our sort of last section here before we dive into some questions. I guess for either of you, how do you keep growth profitable instead of just fast?
Yeah, so one thing I'll kind of, sorry, Grace.
You start.
No, well, it's interesting that you mention repeat purchase rate because that's kind of like I said, like of course we want to keep a ROAS above one. We're just kind of tracking every day, but it's interesting how now our priorities for other channels have changed too. So like for D2C, previously it was like, oh, our Meta CAC, what like we're looking at that really closely. But now that TikTok is really our main customer acquisition tool, we can focus more heavily on, okay, how do we drive subscriptions on our D2C site? Like that's the main thing that we're focusing on, and not just people signing up for the subscription so they can get a high discount initially, but
Right.
maintain them so that our churn goes down and our skip rate also goes down. So we've kind of like reprioritized too that, okay, yes, our CAC is high, say on TikTok, or like we're looking at whatever ROAS, but we've also seen that because we're investing more time from a D2C perspective on like CRM flows and like what kind of subscription reminders we're sending and those kind of priorities, our subscription rate has increased quite a bit, and our skip rate has lowered, especially in about like the last month or two as we started prioritizing those
Nice.
things more. So right now it's like, okay, we know what our baseline impressions that we need are and like what kind of content we need to drive that in order to maintain sales for certain products. We know that like virality is not forever. So the products that are performing right now are more than likely going to become less popular, or we're going to have something complementary to offer with them as like more people stop repeating purchase. So we're trying to find like those complementary product purchases. We're doing that mostly through bundles. So like our PHBC wipes, which are like a pH balancing cleanser wipe duo, as well as our like spray, and then kind of trying to move in the new product launch with that. So showing how all of those things are complementary to kind of like reactivate the customer's interest, and also seeing how other channels can kind of be complementary. So like I do believe it was me, Francie, that asked about the repeat customers in
Yeah,
DrivePoint.
exactly.
And kind of like if we could get to a point, it's like this person started on TikTok and now they're repeating on D2C. That's like
Yeah,
really
the
great information to
omni-channel.
have about
Yeah.
their and like Amazon also in DrivePoint,
Yeah.
like seeing how we can kind of trace that customer journey, or maybe someone likes shopping on TikTok in terms of like seeing what's viral and like what gua sha oil cleanser you should be buying, but they find that Amazon is the most convenient for like recurring purchases. So being able to kind of like trace that customer life cycle and purchase journey is definitely our main priority right now. And there's a few things we've been doing to help start that process, but it'll be a very big unlock when we can kind of get a little bit more customer level data.
And I think
Grace,
for
what do
me,
you? Oh yeah,
we
go
just,
for it.
as
Sorry.
investors, we just always start with the gross margin, because that's really the sort of the lifeblood, which it's the sort of oxygen which feeds the whole P&L. And I think, supplements have a fantastic gross margin, but I've been surprised at companies where they're in the beauty space, for instance, and their gross margin isn't what the benchmark should be in beauty, which means it's very hard for them because the expectation and the infrastructure is built, as you see with all the charge line items,
Mhm.
is built around having a 70 to 80 to 90% product margin to start with. And if you're in more the 70 side, then it's going to be much harder for you to be able to profitably operate on those platforms. And my vantage point is obviously very different. I think we spoke to something like 300 brands last year. And it's sort of when you look at a broader assortment of companies, you do see that there's often a lot of wins that can be found on the product gross margin side, which will then allow you to have more sort of space and oxygen to then invest in TikTok and in these platforms. So always thinking, I think, about the unit economics.
Yeah, that makes sense. Meredith, did you implement any guardrails at Love Wellness? How do you know when to pump the brakes sort of on TikTok shop spend?
Yeah, so we do have like an allocated budget, And even if we are seeing, like, obviously decisions can be made when we need to, like, to change this, but for
Right.
the most part, it's like that is our threshold. And yes, in moments of like a video goes viral or something, we might reallocate budget a little bit, but for the most part, it's like we don't want to risk
Right.
overspending and then seeing that ROAS drop off. Or and then also we have a pretty strong like discount threshold that we maintain too, as well as a like the targets that we have an advertising agency and a consultant that we work with, and they work pretty closely to try and maintain our target AOV and our target ROAS. So those would be our main guardrails. But yeah, spend, we definitely have a threshold because as a small brand, you have to.
Yeah. Yeah, that makes sense. Um, do you have like one decision that you can share that you got right and one decision that you got wrong when it came to, I guess, launching or spending in TikTok Shop?
Yeah. When you say right or wrong, I would say the first thing, like I think it's good that we started so small and that we didn't make a huge investment early on
Mhm.
because we were able to kind of mess around a little bit and see what worked for us.
Yeah.
And then the content, like I said, the quality over quantity thing, it was like, okay, some of this isn't what we expected, but the things that did work, we could leverage later. I also think it was really beneficial to start with the products that we did because they were more unique in that space.
Hmm.
Because I don't want to say this was wrong, it was just kind of a different approach, but because those two products that we started with were doing so well, we then looped in, we have a supplement called Bye Bye Bloat. And we
Hmm.
were thinking, okay, this is going to do just as well because it's also kind of like fast acting. People can order it, use it immediately, and see some sort of benefit. But that space is a lot more saturated. Like there's a lot more competitors in that space, and also just different formats you can take, that sort of thing. Whereas the two that we already had, like the innovation side of things and being unique really
Right.
was like our biggest leverage early on. And because of that, like the content creators would see that like a hook was doing really well and they came to us at that point. Like people
Nice.
wanted to be part of it, but when you're just kind of jumping on the bandwagon of, even though it's a hero product on D2C and like in stores, that doesn't mean that it's necessarily suited to this channel.
That makes sense. Um, Grace, what about you? What best practices do you see from top performing brands that you work with?
I think we've covered them, but I would say the speed of execution and speed of iteration is really
Mm.
important. Being able to see what we found is that content tends to sort of become obsolete very quickly, and then you need sort of new creative. And I think being able to stay very close and using all of the great digital AI tools out there in order to constantly be iterating that creative is where we've seen the companies really do well. And I think the other thing that in terms of best practices, I've actually been really impressed when our founders, and some of our founders want to do this, some don't, but our founders also being front and center on their TikTok as well, and that's been super interesting to see too. But obviously, that's not for everyone. That's a sort of unique personal preference.
Yeah, I see that too with some of our customers coming across my TikTok. A lot of the like in-office videos. I think when like Graza goes pretty viral with those sometimes. They're fun to watch. I like them too. All right, cool. Let's dive into some Q&A. Are you two ready? Love it. The first question from Dan. TikTok keeps rejecting a skincare company based in Hawaii. It needs FDA approval or FDA exemption. Meredith, do you know anything about FDA approval, or can you talk a little bit more about how Love Wellness got into TikTok Shop?
Yes. So the key product that I was mentioning, Intimate Skin Support, is a similar product. It's a hypochlorous acid spray. It does have FDA approval. The one thing I will say, I'm not our lawyer, so I can't speak to this exactly, but I know that you have to be very specific with the verbiage that you're using and the use cases that you're recommending it for. So if you were to like make a claim that the FDA does not approve of. Like there are a lot more restrictions, and especially because TikTok, you're relying on kind of customer testimonials or affiliates saying things and like how it worked for them. You can't necessarily claim that as a brand because it might not align with your FDA approval. I will say, like in my previous life, I at Nix, this was also an issue we faced because it was kind of like a medical device, or it was classified that way by TikTok. And so we had a teen brand, which is technically like children. So because we were marketing a medical device to children, there was a lot of issues that we ran into. So I do know that that is something that TikTok's pretty strict about, but we did have to get the FDA approval for the spray that I mentioned.
Okay, that makes sense. Going back to sort of like affiliate and quality, do you remember how many affiliates you were reaching out to when you first started?
Yes. So when we started, we had 0 affiliates, and then we're now around like 250, maybe slightly more. The way that we started that is we started a Discord page and just kind of started reaching out to people, saw where there was a brand fit, and kind of building those connections. And then since then, we're pretty active on that page. Like our team works to like reach out to those affiliates pretty regularly, but there were a few we reached out to personally as well, like that didn't just join the page. And then when things started working, like certain hooks did really well, we saw that people kind of came to us. So that was kind of the process that we followed.
I would
Awesome.
add we see in our portfolio over 100 per brand.
Nice. Nice. Also with a Discord page or different tactic?
I don't know. I'm not as close to how they manage from a communications. I think I'd be quite an annoying investor if I was as close to that. But I know they have hundreds.
I think it's nice. That's awesome. Cool. So going back to the halo effect, Meredith, anything you can share in terms of them, or Grace, you can share in terms of numbers when it comes to the halo effect on the Amazon and D2C channel?
I will say, I think Grace might have more insight on this than me, but this is a very like current analysis that we're actively working on. So I don't have a great estimate, but right now our estimate is about like 15% of the spend that we are spending on TikTok is definitely impacting other channels. The flip side of that I'll say, like maybe 15% sounds low if you're spending a lot, but like I mentioned, we have like a few key hero products that are really moving on TikTok, but we have a much larger product assortment. So like what we're selling in Target, a lot of that isn't something that we're pushing on TikTok. And so for that reason, it can only have so much benefit in store if there's only like a few products that are being highlighted.
And I would say, I mean, totally varies, but I've had founders say 50, 50, even 70. I read a Phosphor report, which definitely said it was kind of on the higher end. If that's one you want to, it's free, you can download it online, but they've got some numbers in there as well.
Cool. How are you staying competitive with your assortment on Shopify when TikTok Shop is typically more discounted?
I'm so happy to. Oh, go ahead.
Yeah. No, I agree with you. I don't have a ton to add on this, so you go ahead.
Well, this is something we've seen. We've seen a couple of our portfolio companies really think about the product assortment across channels. So focusing on TikTok as bigger multi-packs, which you could then have more heavily discount, similar to as you would think about a club, you know, a Costco or Sam's channel, insofar as you're getting more value because it's a bigger product, but also it just makes more sense from a, you know, commission structure because it's a higher value product. And then really focusing on D2C as putting your like limited edition drops on D2C. So new flavors, new colorways, in order to keep that sort of exclusivity for your initial D2C customer. We also have companies where they have one particular offline retailer who's a key part of their business. So they take that LTO approach to that retailer instead. And then I would say the other the other point we've seen is brands using D2C for these limited edition collaborations with other brands. And I think that's also nice particularly from a TikTok perspective, but not necessarily needing to be on shop, just from content creation as a sort of brand building where you collaborate. I think you mentioned Graza earlier. Graza have done a phenomenal job at doing this. And then sort of having those drive through, though in Graza, I think because of the nature of the food business, they put those in Whole Foods and these other channels, but that's definitely been an interesting strategy.
Nice. Got an interesting question here for you, maybe for you, Grace. For new brand, would you recommend TikTok Shop plus Amazon or TikTok Shop plus D2C?
I think it depends on the product. I think if it's a heavy, expensive product to ship, then Amazon. But I would say your D2C site is kind of your landing page. Everyone will check it. So I think that's sort of table stakes, unless it's something which is frozen where you just D2C is just not going to be unprofitable. And then I would also, maybe this is a controversial view, but I would put Amazon early because I think particularly if you look at kind of some of the beauty channels, beauty is so fundamental for Amazon is so fundamental for beauty. And my sense is that retailers are more competitive with Amazon right now than they are with TikTok. And I think because TikTok can be more incremental, so you'll see Amazon carved out from retail contracts as we're exclusive with you, you can't be on Amazon, or retailers won't like it. So I think just being able to have that before you go into retail will mean that you're not going to then be locked out for 2-3 years down the line.
Cool. Meredith, I think there's a little bit more for you when it comes to fee structure. Do you have to pay creators for UGC content plus affiliate fees, or can you just work on the affiliate model? And how many affiliates do you need to work with to be successful as a small brand? I think we answered that last part already.
Yeah. In our case, you do pay for some UGC content as well. I think there's definitely a argument to be made that you could just work with affiliates only and like pay that affiliate commission. But in terms of just like broad level, like trying to get eyes on your content, that some like you need a decent amount of UGC content. But again, there's also like I've heard arguments be made that having like smaller creators with like a really loyal follower base, and like if you had them as affiliates and if you have a more niche product, then like there's definitely an argument to be made for that. And I mentioned this earlier, but I think, yeah, we're around 250 affiliates at this point.
Cool. From Ashley, do you leverage offsite performance data that TikTok Shop has in their backend to determine a halo effect? If so, do you find it helpful and realistic? I don't know of any offsite performance data, but it sounds pretty cool.
Yeah, we definitely haven't, but it does.
I was going to say, I need to look at the
I'd like to
API
hear
for
more.
us.
Yeah,
I'd like
that
to.
question.
Me too. Yeah.
But it sounds smart and I should know. Thank you, Ashley.
Nice. That's helpful. Well, I know where the three of us will be going after this.
I know, literally straight onto that. For the point, Madison, your question on brands performing well when the founder is more active or not, I know I brought this up, but I would say I have 2 brands in my portfolio and in our portfolio at Touch Capital. Both doing fantastically well and growing very quickly D2C. One, the founder is not in any of the videos. One, the founders are in all of the videos. And truly, I think it is up to the founder of what feels authentic. I don't think it's by any means something you have to do if you don't want to. Maybe I'll start a Touch Capital TikTok page. That could be my homework so I can learn about the offsite analytics.
I love it. All right, we answered all of the questions here. I guess maybe like a closing question on my end. What advice would you give a $5 million brand that wants to start out in TikTok Shop and is considering it? We heard some of it.
Reach out
Get started with
reach out to us to see if you're fundraising. If you're 5 million LTM, we want to speak to you. Grace@touchcapital.com. That's my advice.
Good advice. Know who to speak to. Meredith, I think you mentioned like experiments and sort of a bunch of testing up front with existing products.
Yeah. And I would say too, like, you don't need to, like Grace said, cash is king. Try and move slowly so that like, you want to remain profitable. And if something doesn't work and you're small scale, then great, you figured that out early on. And it's important to just kind of grow slowly sometimes or a little bit more slowly and like have that spend threshold, that sort of thing, so that you can look back and like see those wins as opposed to like really regret a decision, which I know that sounds very it's a pretty conservative approach, but I do think we've been like, okay, we saw this work, so we're going to repeat it. If we're taking a risk, we really know exactly like even like with a few subscriber things that we've tried recently, like I mentioned in our D2C site, it's like, okay, we're going to try this. We know what the low side of it's going to be, and if that happens, we're comfortable with it. But I really, I don't think you need to have like a ton of affiliates and a crazy affiliate commission. Like start
Right.
small, see how that goes, and then if you see like, okay, this isn't giving us the quality of content, but we can see like what we need to change, then great, you can invest more and you have like a strong justification for doing that.
Awesome. I love it. Thank you, ladies, for your time. As Grace said, you can find her at Grace at touchcapital.com.vc.
.com.
.com. Perfect. So if you're thinking of launching on TikTok Shop, you have 5 million in revenue, reach out to Grace. And then Meredith, quick plug for the new product launch for Love Wellness. Congratulations.
Thank you.
It's not on this page, but the quick
No.
melt strips. Is that right?
Quick melt strips. We have 6 variants. So sleep, energy, cravings, calm, UT, and bloat. And it's available in Target right now, as well as on our site, TikTok Shop, Amazon, and Ulta very soon.
And
Love
Meredith,
that.
which is the product which you think was the one which did best in testing, which is the one we should be trying first?
So they actually all did well. Sleep, I'm a pretty good sleeper, so that did really well in terms of
I'm gonna
reviews
try
and
the
people are
sleep one.
loving it. But the cravings one is delicious. And
Okay.
so it's been working for me. It really
Love it.
satisfies a craving. So, but they're all great depending on what you need
Okay.
for.
I'm
But
gonna
yeah,
buy the
those are
full pack.
my two plugs. Yeah.
It's awesome. Well, yeah, and if you need any help forecasting TikTok Shop or want to learn more about analytics there, reach out to us at DrivePoint. My email is francisca@drivepoint.io, but I think Mike Gavin will put an email in the chat as well. And what we do have for everyone attending, you'll get our TikTok Shop forecasting template as well in a follow-up email. Thank you everyone for joining, and thank you, Meredith. Thank you, Grace. It was a lot of fun.
Appreciate it. Thank you.
Thank you. Have a good rest of your day. Bye.